The Fed will be speaking today. Will it break the market? Because there's going to be an explosive move in the market. Trump is shouting, gold is pumping. What about the dollar? The dollar is currently standing with one leg. Now, today's news for FOMC is very, very dicey. Now, this is why Trump is calling for a rate cut and why every trader is watching today's Fed decision like a hawk. Now, the latest data as of June 12, 2025 shows that the CPI for May 2025 was at 194.3, while that of April was about 190. This shows that there was an increase from April to May, and we are yet to get the data for June. By July 12th or 13th, we'll get the data for June. So Donald Trump is pulling and putting all pressure on the Fed to cut interest rates. And this is not just about politics. The recent inflation shows that prices are slowing down across all board. And that's why I gave us the data for the CPI. CPI came in later, and we saw that the price went down a bit. Same thing with PPI. Now, this signals that inflation is just cooling down for a while. And this is exactly why Trump is pushing for a scenario like this. Now, but why does this matter to you as a trader? Because fundamentals, when aligned with technicals, would amass more profit for us and will enable us to position ourselves rightly amidst all of these shenanigans. Now, there are key data I would want us to look at. They are the CPI. CPI simply means your consumer price index. It measures inflation on a consumer level. Now, a lower CPI simply means that the inflation is slowing down a bit, which eases the pressure on consumers. And then the second key data we'll be looking at is PPI. PPI is Producer Price Index. Now, for CPI, CPI tracks inflation on the consumer level, but for PPI, PPI tracks inflation at the producer level. Now, if producers pay less, eventually consumers would do same. Now, what this implies is a recent data for CPI and PPI is showing that anytime the rate drops, it will have an impact in the market. So the key insight for this is PPI drops, CPI usually follows. So this helps to forecast, as traders, the Fed's next move on interest rate. And today being Wednesday, we'll be looking out for the FOMC news today. Now, why is Trump pulling out more pressure on Powell for these rates cuts? I'll be giving out the reasons and then the impacts. Now, one of them is to boost the economic growth through cheaper borrowing. The second is to make the dollar weaker, encouraging US exports and discouraging the imports. The third one is to attract investors through new incentivized programs, just like the dollar card Trump brought out last month or some weeks ago, to enable more people become citizenship through that card route, thereby creating demand for the dollar and all of that. Now, what this means is if the rate is hiked by Fed, it will lead to a stronger USD, it will lead to a stronger dollar, then it will weaken the gold. Now, but this is very dicey because never in time and never in history has FOMC clashed with a major tension just as the war that is currently going on. So I would like you to drop your thoughts on that. Would the Fed increase their rates or would they decrease their rate? Now let's find out. If they decrease the rate, It will lead to a weaker USD. That's exactly what Trump wants. It will lead to a stronger gold. Then it will boost the stock market and the commodities. Now, let me give us real-time geopolitical events. Number one, Israel and Iran tension. Iran launched an attack on Israel, and of course, Israel has retaliated. That's why, as at yesterday, the price for gold was surging high, because when there's tension globally in world events, gold, which is considered to be a safe haven, usually pumps. Now, the oil prices and the war, what's the impact? What's the correlation between the war and the oil prices? Now, war increases the demand for oil, for military mobilization, energy security, and all of that. And Iran is a major oil exporter. It's a major oil exporter. Now, the result for this would be crude oil would be moving up. I said that about yesterday, of the correlation between gold, oil, and its relationship with events like war, tension like war. So crude oil will be trending upward if this persists. Same thing for gold. Now, what are the market instruments to watch? Now, if the Fed cuts rate today, these pairs that I'll be mentioning, they will have a solid volatility move on these pairs. Now, because of these rates, and investors are looking at keenly for this, if the Fed cuts rate, US dollar will be weakening, so USD JPY will fall, GBP JPY will fall, Euro JPY will fall as well. Then crude oil would increase and pump massively. Same thing with gold and Bitcoin likely. Now, what if the interest rate is increased? The US dollar will gain strength. And if the US dollar gains strength, it means that gold will dump, and all other correlated assets tied to the US dollar will dump as well. So today by 7 p.m. Nigerian time, we'll be monitoring the FOMC statement by Powell and the Fed press conference. Now, depending on the outcome and the decision of that meeting, if the rate cuts, USD will be bearish. Now, when we talk about rates cuts, what exactly do we mean? Let me just break it down for a number of us who will not be able to catch that. Now, when we say rate cut, it simply means the federal government, in this case, the US Fed, will be lowering the interest rates, and it will lead to, it will increase borrowing. That means loans, mortgage will become very cheap. It will increase spending. Business and consumers want to spend more. It will stimulate investment, and stock, asset, mutual funds, REIT, they would be on the rise. Then, of course, it will weaken the US dollar, which is the currency, and that's our focus. So when it does that, export becomes cheaper, import becomes expensive. So are we clear on that? So if the rate is cut, these are the things that would play out, leading to USD being bearish. And it might probably lead to a higher inflation if overdone. And that's why there's this tussle between Fed and Trump. Now, what about if the rate is increased? When we talk about rate hike, it simply means the interest rate is increased by the Fed, and we have an impact on USD. It will be bullish, and of course, it will slow down borrowing because loans will be expensive. Because loans are expensive, the cost of inflation would increase. Then spending would be reduced as well. And the risk, it may probably lead to a recession if over-tightened. We saw something similar during coronavirus 2020, during the administration of that time. Now, what if the rate is unchanged? They're not increased down, they're not reduced down. We would have to look out Powell's tone and subsequent guidance, subsequent informations about PPI. We have to look at those data to be able to see, okay, what is the reaction in the market today? Now, if this short video has helped you concerning today's FOMC, has given you a glimpse of what to expect concerning today's FOMC's meeting, kindly share, like, subscribe, and until we meet again, stay profitable.